Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny, Bert, Hogan, The Rock, Stone Cold, Mankind, just your favorite Ultimate Warrior. Come on, let's just keep going. You know us by now. We are the Dividend Diplomats. Today, we're going to talk to you about a consumer staple giant that is yielding 4%, down over 12% year to date.
Down over 12%, 119 billion market cap, over 12 $1 billion brands within this portfolio. Consumer oriented. Is this a time to buy this stock? Is this a stock to buy right now? Let's check it out. But before we do, smash that subscribe button. Give Bert the Hurt and Lanny a nice thumbs up on the Dividend YouTube channel here, guys, because we're trying to reach the millions and millions of dividend investors out there. Let's go. Hit them hard, Bert.
Let's jump in, because when the market's rising like it did last week, finding an undervalued stock becomes a little more challenging, but it does not become impossible. We are always on the hunt for stocks that are showing signs of undervaluation. That is why we have our metrics that we look at when we screen every stock. We stick to the formula. We watch consistency, because over time, the method works for the two of us, and it's helped us grow our income from $0 to over tens of thousands of dollars since we started dividend investing.
That's right. And guys, this stock, I know Bert owns in his portfolio. I bought it in my wife's stock portfolio. And wow, a lot of things have happened with the share price has been kind of almost flat for quite a few years. And, a lot of things have been happening internally on the corporate restructuring side because of activist investors. But Bert, man, they're hitting hard on sales growth and their projections look pretty amazing.
If you haven't figured it out by now, we are talking about Unilever, ticker symbol UL, our favorite non-US company, which is going to make doing these analyses funny. But you're absolutely right, Lanny. What we love about consumer staple giants is during bad times and great times, people are still buying their products. You don't need to stop buying healthcare. You're always going to be buying Dove. You're always going to be buying laundry detergent. You're always going to be buying food, although the Heilman mayonnaise, the big jugs, you might put some of those aside as you're looking through your budget, going through the grocery store. But we mean it. They have Suave under there. They have Popsicle. They have, man, there are so many brands. We're just going to put
They got Ben and Jerry's ice cream. Let's go.
Right. That's right. So you think about it. You're still buying these items, even if you don't necessarily have the same budget that you used to have 6 months ago. That's why we love consumer staple giants like Unilever, like Procter and Gamble. You're absolutely right, Lanny. They just released earnings and they continue to crush it. And that's what I think was the biggest surprise here when you looked at Unilever. They still posted double-digit sales growth. Sales grew 10% in the quarter from there. And I think that's such an impressive feat, especially in this current economic environment. And
that's the ticket.
It's the ticket. You're right. They even increased their annual sales guidance to 8% plus. So this sleeping giant, the company, everyone said, the growth is slowing. Their brands are boring. Sales are dying for a lot of these companies. Unilever saying we grew it in the third quarter and we're going to continue growing it throughout the year, 8% plus.
In the words of Arnold, when it burns, it grows. And guys, growing the dividend, they have done this. They continue to do this for over, again, we'll look at the metrics, but over 10 years. Yeah. And guys, this is a very big staple stock during recession times because consumers, again, as Bert said, always need to buy these types of products. Bert does a spray of the Axe before he leaves the house. Yeah, he puts the mayonnaise, whips the hair back. It just works for Bert.
That's why I'm wearing a hat today for this video. My hair looks terrible from that mayonnaise paste that we put in there. One of the other things that we talked about that continues to come out is Unilever, like some of the other large conglomerates, is getting activist investor going in there that's making some noise, but is overall helping to benefit from there. What's his name? Nelson Peltz is now on the board. He has forced his way to get a seat here for Unilever. And they've already started the corporate restructuring that's coming here in 2022. He has experience working with Procter. He has experience working with some of the other major guys. I can't think. Oh, the Heinz one, the conglomerate that bought Heinz. Had experience there, so he's hoping to bring that experience to Unilever, help restructure the company, save costs, and grow them, and bring them really forward into 2022 and beyond.
You're saying about 3G Capital?
No, it's not 3G. I think it was before 3G Capital. I can't think of what it is. I'll put the article up here, everybody. So apologize, I can't remember the name off the top of my head, but he has experience in the sector. That's the most important takeaway.
All right, guys. So Unilever currently trading at $47.16, down 13% this year, down 10% in the last 52 weeks. Actually better than what the S&P 500 has done, even though the S&P 500 was up 5%, thanks to a lot of inflation data and hints from the Fed. We're going to run through the dividend diplomat stock screeners. We're going to look at the three metrics: the price to earnings ratio, the payout ratio, dividend growth. We'll look at the dividend yield. But guys, we're going to compare them as well at the end to a dividend king to see if Unilever stacks up well against this dividend king.
So let's jump right in. Price to earnings ratio for Unilever, they closed at 47.16 at the time of this video, forward EPS 251, PE ratio 18.79. Not the cheapest compared to the market, but definitely a discount compared to the S&P 500 today. And we'll see how they stack up against their competitor later.
As Warren Buffett says, it's better to buy, a nice company at a fair price versus a crappy company at a very low price.
Absolutely right. I always got to respect Buffett, especially when that, because it holds true, especially as you look at what's going on in crypto and you look at what's going on with some of the other companies where the fundamentals may not have been there. People may have ignored some of the warning signs as they were going through it. But look who's still standing, these dividend aristocrats, these consumer staples, all of those great.
Dividends keep flowing. And talk about dividends. Let's talk about the dividend payout ratio for Unilever, which really speaks to the safety of the dividend. We look at this metric because we want to see how much are they paying out of their earnings to the shareholders and how much are they reinvesting back in the business to reinvent themselves, to grow their products and expand their brands. So they pay right now. And again, it's an international company, so you have to convert the dividend. Right now, we estimate the US dollar equivalent is $1.87 per share per year. So you take that over the $2.51 and you come out with about a 75% dividend payout ratio, which is a little bit on the higher side.
Yeah, but that's not necessarily bad for consumer staple. But again, we'll see how they compare to this giant later. Dividend history, not the largest of the dividend growth. It's been their 5-year average is 4.63%, about, because it's always hard to peg international companies with what their exact dividend growth rate is, but still solid, but below today's inflation and not the largest compared to some of the other companies out there. They've increased that dividend for 10 plus consecutive years. And again, it's hard to see just how many consecutive ones were increased, but if you zoom out, you look at their dividend chart, you can easily see that for the last 10 plus years, Unilever's dividend continues to trend upwards despite the currency translations.
Dividend is up, adequately valued. How about the dividend yield, guys? That's how much it's going to pay you to own this share, own a share of stock of Unilever. Right now, based on the yield and the stock price, the yield is 3.97%, which is well above the S&P 500, more than 2x. And it's definitely higher than most savings and money market accounts that are out there right now. So every $100 you invest in the Unilever, expect $3.97, and it'll grow each year through dividend growth, and even more if you reinvest those dividends as part of the drip, baby.
So let's summarize Unilever before we start the comparison. PE 18.8, payout 74%, 5-year dividend growth rate 4.63%, 10-year dividend growth with a yield of 3.97%. Lanny, let's cue the entrance music.
Dun, 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 dun,
dun. Everyone, we're gonna bring in Procter & Gamble, ticker symbol PG, an obvious comp for Unilever for so many reasons. They're strong brands, again, just like Unilever. We'll put that chart up, the famous Procter & Gamble chart. Even larger conglomerate for market. Unilever's market cap's 119 billion. Procter & Gamble's is 334. Obviously, we love Procter & Gamble. They're one of our top 5 foundation stocks, and they have increased that dividend for 68 plus consecutive years. One of the OG dividend kings. Let's see, is Unilever undervalued, fairly valued, or overvalued compared to the GOAT of the consumer staple sector?
All right, guys, we're going to rifle through these. Again, a trading at $140.97, expected earnings $5.82, and they pay $3.65 out of a dividend. So the price to earnings ratio for PG is 24 times earnings, well above the 18 from Unilever. The dividend payout ratio is at 63%, way below Unilever's at 75%. Now, Bert, how many years though has Procter been growing that dividend, brother?
68.
Oh, 68, almost to that 69. Bert's favorite football jersey number.
Yeah, I guess so. I didn't think you were going there today. Whatever works for us. There, subscribe to this channel if you haven't already. All right, so that's 68 years of dividend increases. Let's check out the yield here for Procter & Gamble, 2.59%. So it's interesting.
Less than Unilever.
Yeah, it's interesting when you compare Unilever. Procter & Gamble is more expensive. Payout ratio is a little bit better, but still slightly above our metric. Higher dividend growth rate, obviously a longer history of increasing dividend, but a significantly lower yield. I'd say about 150 basis points less in yield when you compare the two. So
both stocks performing pretty similarly over the last year. But again, Procter 3 times the size and market cap and a very long dividend growth streak.
Yeah, so we're talking about Unilever today. When I look at these numbers here, what am I thinking about Unilever? They're clearly undervalued compared to their industry sector. Compared to Procter & Gamble, you can't say that Unilever is not undervalued. S&P 500, slight discount, so they obviously check the valuation mark. It'll be interesting to see how their sales growth translates to earnings growth over the year too. The payout ratio is not the lowest, it's not the highest. I still feel very safe where the dividend is, even though the payout ratio is 74%. But if it continues to creep up to 80, 90%, that's obviously going to become a much larger red flag that would prevent us from investing in Unilever. And obviously, dividend growth, I'm liking it, long-term trending upwards. That's all you can really ask for these days.
So, Bert, what are you doing right now? Are you buying Unilever stock? Are you going to add a couple shares here?
Yeah. Yep, I think that's what it is. I think Unilever is a good picking stock. I think it's a good, what do you want to do at the end of the week if you want to just throw $50 more into the market? Unilever, grab another share here or there. You can make a bigger splash if you want to. You can keep as small as you want to, but I like the share price, and I like that it's an undervalued stock. My wife owns it in her traditional account, so as we continue trying to grow her traditional position in Unilever, we own about 25 to 3,000 right now. So adding in, building that Unilever position over time, 1 or 2 shares. 10K. Yeah, we're not signing them up for the weekly stock purchases yet to replace Johnson & Johnson, but you will start seeing some purchases nibbling there. That's interesting. The ex-dividend date is November 17th. So we'll see if we grab a couple more before that X date to capture that beginning of December dividend. What are you thinking, Laney? Do you like Unilever at these prices?
I like Unilever. We also own quite a bit in my wife's account. Obviously BYM is getting pretty expensive to buy weekly. So that's taking a little bit more out of our capital every week. Don't even get me started. I like it. We're probably not adding just based on kind of where the position it is at, because I think we were buying quite a bit. But if it hits over that, if it gets to that $45 range again, I think, we'll probably nibble again, even though it's been there this year quite a bit actually.
Yep. So they got, obviously the price jumped up a little bit, but they're still showing some signs of slight undervaluation. Let us know what you think of Unilever. Are you buying? Or are you watching something else, looking your way in some other sector? If you haven't already, subscribe to the channel. Give this video a nice old thumbs up. Lanny, anything else you want to tell the viewers?
Guys, let us know what other dividend stocks you're buying as the stock market is going up. Were you impacted by the crypto FTX BlockFi? Let us know in the comments, and let us know if you're pursuing that financial freedom. Thanks for riding with us. Definitely hit that subscribe and like button. That's Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.